as we always do. So it's going to be slightly lower, mildly lower. 23,435 first rate, 23,400, about a third of a percent down. Nifty Bank is down about 0.14, 0.15. 51,180 or so is where that is at. Actually, it's almost flat. The Nifty Bank doing better than the Nifty. The small cap index is down a third of a percent. And I think you'll have the mid cap index, which will come up on your screen, is down about 0.45, 51,405 on the Nifty mid cap index. So that's the screen and the rates which are coming through. The Nifty heat map will give you a sense of how we are starting. But it's all about stocks this morning with auto comps, etc. in focus. You've got more down than up. And just about 15 names are higher, and the rest of the 35, 36 names are lower this morning.
And it's auto along the way. And the worst stock that's hit, and which is very sort of directly hit, is obviously Tata Motors, because of whatever imports that are going into the US from Jaguar and Land Rover, wherever those plants might be. But the fact is that once those cars are coming in, it's 25% tariff, as it's become very clear. So Tata Motors is a big casualty. There's a bit of a sentiment rub-off on Bajaj Auto and M&M. These are completely sort of inward-facing companies, and their export markets, for instance, Bajaj Auto are, Nigeria, etc., and Latin America. So they're not impacted by what's going on in the US. But sentiment rub-off, yes, slightly on the lower side. Eicher Motors also down about 1.5% at this point.
The tariffs, I think, only passenger cars.
Light trucks and passenger cars along with components.
Yeah, but I don't think two-wheelers, I'm not sure. I mean, yeah.
I'm saying that they don't have exposure. I mean, Bajaj is not exporting anyway to the US too much. Their markets are Latin America, Nigeria primarily. But there's a bit of a sort of sentiment rub-off on the downside. Maruti, of course, is in focus because of the boardroom changes, the first ever Indian getting appointed, but stocks, of course, down about 0.5% at this point in time. By the way, let's look at Ashok Leyland because of this overhang issue on the promoter pledge, 4% down on that stock as well, since we're talking about autos. So aside of autos, IndusInd Bank is lower by about 2%. Sun Pharma, Dr. Reddy's, is some selling in pharma names as well. HCL Tech is down about 0.6%. It's not too bad actually for the Nifty. Let's talk about the winners then. What's keeping it up on the other side? Wipro, big order win announcement coming through, 1.5% up. L&T, we were just discussing that stock with our experts, 1% higher over there. Trent, because of that initiation brokerage report, 1.5% up there. Today, some of the big boys are supporting Reliance, ICICI Bank. These stocks right now on the positive side of the screen. But for the time being, Nifty is still lower by 40 points.
Well, that's right. From the broader markets, though, plenty of stocks are calling for attention. Some of them are Madison, as you said, 6.5% down. So now BLW, that stock is down. But remember, the management had joined us. They said they had a plant in Mexico and they were supplying in Mexico. So they believe that they would not be hit. For the time being, the stock is down close to around 5% or thereabouts. Other couple of, auto ancillary companies, like a Balkrishna Industries has lost close to around 4%. So keep an eye out on that one. Mid-size IT companies as well are getting hit. You have KPIT Technologies that is down 3%. Tata Elxsi as well is down close to around 2% or thereabouts. BSE, investors like what they've heard with regard to the company considering a bonus issue. For the time being, the stock is up 3.5%. So big up move is what we're seeing out there. NBCC is up close to around 3% and PB Fintech up close to around 1.5%. Good recovery is what we're seeing from the lows on the Nifty itself. Now it's down only around 30 points or thereabouts. And as we mentioned earlier today as well, Trent could be a stock you should be focusing on. Yesterday had good price action. You have the initiating coverage as well. And they've added fair number of stores in this year so far. So I think the street will like that. On the flip side, you have a couple of other names that you should keep on your radar. Zomato as well as Geo Financial. Both of them will be part of the Nifty effective tomorrow. For the time being, we're seeing both those two stocks bring a relative outperformance.
Absolutely. And up on your screens now. By the way, the Nifty has completely recovered, right? I mean, we started with about a 0.25% kind of cut. We're now absolutely in the flat zone, 20-point lower. 23,467 is where we are at this point. So it's more stock specific with Tata Motors and Samvardhana, Motherson and Bharat Forge, etc., which are down in varying degrees. But for the broader market, we've come up pretty smartly. We have Lawrence Belanco now joining us. He's a market master of the day. He's, of course, a much sought after view on technicals with CLSA. Lawrence, great to have you with us back on the program. Thank you for your time. Prashant here. I remember the last note you put out something called the breadth thrust it was, right? And you said, it's indicating that maybe there's a bit of an up move here. And the up move has happened. From the lows, markets have picked up smartly. Where from here, Lawrence? And is it going to be, as some have put it, W kind of a market, up and down a few times over? Or have we seen the worst already?
Yeah, I mean, I think to make a short answer to the question, I think the worst is over. I mean, there were two things we were looking at. One is, in the third, fourth quarter of last year, we had this topping pattern that suggested you trade down towards a 21,800 to 22,800 zone. And that was basically the trading range that you had prior to the India elections in June of last year. We fell into that range. And the big thing that we saw last week that really sort of improved the technical landscape was, one, we broke above the 50-day. And what was different about last week's break above the 50-day versus December's break above the 50-day is that we had this breadth thrust signal. And now what that measures is the number of stocks within the Nifty making new 4-week highs. And typically when that gets above 55%, we have a really good hit rate. Looking at it on a 90 or 250-day basis, that the Nifty is up over 13%. So, that would suggest that we revisit the highs. We trade back over 26,000.
Okay, so you're seeing a move back above 26,000 perhaps, and the worst is over, Lawrence. This is sounding really good. So then what is looking the best as India kind of recoils and, goes back to those old highs? Where do you see maximum momentum building in the market?
Yeah, it's quite interesting. Late last year, we talked about the private banks over the PSU banks as a key sort of relative ratio. And, in the correction that we had from the September highs into the lows in February, that the private banks actually fell less than the PSU. So they did fall, but they fell less. And now that we've started to see things turn around, we've seen that private banks continue to outperform. So, banks have held up relative to the Nifty. That's still a leadership market since essentially the second half of last year when we started to see the improvement in the banks, but just getting more granular within that banking space, it's the private banks that really sort of stand out. You've seen breakouts in Kotak Bank after being range bound for the past 2.5 years. You've seen HDFC sort of reassert itself after its breakout, and you've seen RCRCR trade back to its all-time high. So, that's a key sort of focus area. And then you've got some of the non-financial banks like Bajaj Finance, another sort of big multi-year trading range breakouts. So that's really where the interest and momentum is right now in the Indian market.
Private banks and big financials like Bajaj Finance. Indeed, I mean, what a move Bajaj Finance has showcased, right? Lawrence, just to go back to the numbers and to understand the time range again, over how many months, what's your time period in which you see the all-time highs come back, and what's the exact level that you would track?
Yeah, look, so I think the key message here, if we just take the average back testing of the breadth thrust signal, 250 days after you get that buy signal, the market is up 82% of the time, and the gains on average is over 13%. So, if you're looking at just taking the average and what the expected return will be, it'll be over 13% within a 250-day window.
Hi, Lawrence. Good to have you on the show. We'll get back to equities. For the time being, I wanted to focus on two asset classes which are very, very important from an India equity market perspective. The dollar index, has it topped out? And are you looking lower levels on that one? And the other one is Brent crude prices as well. That seems to be breaking down. From an India market perspective, that's another tailwind for us. So give us levels on both these two.
Yeah, so let's look at the dollar index to start off with. December, we did see a break above the 106, 107 area. And what the significance of that, it's the upper boundary of the trading range that the dollar index traded between 2022 and 2024. What we saw basically in February is a sharp reversal in the dollar that saw the dollar index drop back into that trading range. So we've basically seen a reversal in the dollar index back into a trading range. So really more in a neutral setting, let's say from an intermediate term perspective over the next 6 months, that we stay range bound between this 100 and 106. If you take a step back and you look at the longer term charts, the dollar index has been in an uptrend since 2011. But this lower high that you've made in December relative to the September 2022 high does give you an indication that that dollar uptrend over the past 14 years is starting to top out. So the longer term profile is starting to provide us with evidence of lower highs. To confirm a major reversal in the dollar index, we still need to see a break below the 99 to 100 area. So next 6 months, look for a trading range and consolidation. On a longer term side, a break below 99 would be a major reversal of that dollar uptrend you've seen for the past 14 years.
That's interesting. Sorry, go on. Please, you want to finish that point?
Yeah, so I just wanted to touch on Brent then quickly.
Yes, please.
And then on Brent's, you're quite right. Over the past 18 months, we've seen the $70 to $71 area be quite a key support area, but every rebound that we've had off that $70 to $71 support area over the past 18 months has met selling pressure as on every rebound. So what you've had is this characteristics of selling the rallies in Brent, which builds a pressure on this 70 to 71 and ultimately suggests a break below that level. And again, from a longer term perspective, that suggests a downside target of 51 to 52 on Brent oil.
Okay, 51 to 52 on Brent oil. I got that. So interesting and sort of strong views in that sense. So Lawrence, just on that Nifty point, so 13% over the next 1 year or so, right? Just going
Yes.
by this signal.
Yes.
Roughly. Okay, got that.
And if you wanted a shorter term time horizon, at 90 days out, average gain is 7.5%.
Okay, got that. Lawrence, what about the NASDAQ? And because, here the Nifty and the NASDAQ have been the two best performing markets and very closely correlated. Is the US market, how's the US market structure looking?
Well, it's quite interesting. If you look at year-to-date performance across asset classes, there's significant performance dispersion on a year-to-date basis. But even if you take it back to the Trump election victory back on the 5th of November 2024, and the major US indices from the Mag 7, NASDAQ, S&P, are either flat on the year or marginally negative, where China's positive, Europe's positive, and India's sort of recovered into positive territory with this recent rally off the low. So I think we are seeing major dispersion develop, and as long as the US doesn't roll over into a recession, a slowdown in the US can continue to see this performance dispersion. So I definitely wouldn't start an investment thesis with this was the correlation, because we've seen over time that correlations can break down and a lot of money can be made on a breakdown in these correlations.
Lawrence, I just want to talk about Indian IT, because the thing is that the foreign dollars have finally started flowing back into this market after a long time. You mentioned financials will definitely be big leaders. IT may not have a fundamental reason to rally, but do you see it on the charts?
So looking at the charts, unfortunately, the relatives rolled over. We're below the 200-day. The absolutes rolled over. We're below sort of key moving averages, and we also below the 2021 and 2024 highs that we set. So we basically fallen back into the trading range that you saw in the first half of 2024. So we're not really seeing any leadership from this sector. The large cap names look sort of more vulnerable than some of the mid cap names, after the mid caps names obviously had significant corrections from their September highs. But yeah, it's not a leadership sector. It's not something that we're sort of pushing as an overweight, at least from a technical basis.
Okay, so not really leadership in IT. Get that point. Financials, you made that point very clear. Lawrence, a lot of the state-owned companies, they were the leaders of the market up until September of last year, right? These big stocks, the PSUs, and even other capital good companies or the MNC companies like Siemens, etc. This was the red-hot part of the market. How do you find the structures here now?
We've started to see a bit of an improvement in the infrastructure names from the PSU side. So NTPC, for example, that's had a good recovery, but we're still below the 200-day. So there's a bit more work that we need to see, to confirm that in the same way that we've seen confirmation in the banking side. So the PSU non-banking parts of that PSU index is what we focus on, but we do need to see a bit more evidence that we've got a confirmed base where we think it's more sustainable on the upside. So a bit more work needed in that space.
Lawrence, before we let you go, will India outperform from here on global markets? We've had a period of underperformance and now we're getting our mojo back. Do you think the Indian equity markets will outperform? That's point number one. And that 7% return that we've seen traditionally in the 90-day window, some part of that is already played out, the 4% that we've had in the last 1 month or so, or is it from here on to be calculated?
Yeah, so look, you're looking at an average, right? So each move has different speeds to how we typically see it. So yes, we could spend a period of time just going sideways and then have another 4% upside within that sort of 90-day window to get there. It's so very hard to sort of pinpoint exactly from a time frame perspective. But the point is, and the message should be here, that breadth has improved. So the participation in the rally and the break back above the 50-day is typically and historically a strong signal that while we'll get pullbacks on the way, that we should now be buying the pullback rather than selling the rallies, which has been the behavior that we've seen from September. Now, to answer the question on a long-term basis, we still got 37 to 42,000 as a longer-term upside target for the Nifty. There will be periods, where China rallies strongly and we get some outperformance from there. But, still having a long-term upside target of 37 to 42,000, I do think, India would still be a key driver for emerging markets, but also relative to the global benchmark as an outperforming market and one that you do want to be adding to exposure. And we've got, the evidence, at least now technically, that you want to be buying the pullbacks, basically.
Okay, Lawrence, good to hear your thoughts. Thanks a lot for joining in and join more often. You sounded quite bullish and optimistic today. The bulls will love it. Thanks a lot, Lawrence.
You only want the bull message, right?
No, we had a period of underperformance, Lawrence. It's good to hear a bullish thought as well. Thanks for joining in. Let's focus on the next stock, Suzlon. That's the one on our radar. Motilal Oswal, they've initiated coverage on the stock. They have an aggressive buy rating. Let's find out more about how things are shaping up from here on. We're joined by Mr. J.B. Chalsani, the Chief Executive Officer at Suzlon. Hi, sir. Good morning, and always good to see you in. Well, the Motilal Oswal note is quite positive on the prospects of the company. Let's talk about the industry first. Wind energy here in India is relatively underpenetrated if you compare it with the globe. And Motilal, in their note, they're saying that wind energy is expected to account for close to around 20% of India's renewable energy by 2030. Currently, I think it's low to mid-teens. Do you second that thought? Do you believe that's possible, 20% of the total RE space? And also, they're talking about India's new wind energy installations to reach around 8 gigawatt annually by FY27. Is that possible, 20% and 8 gigawatt?
Absolutely. If you look at even the projections requirement as per the CA projections itself, by 2030, 300 gigawatts is solar and 100 gigawatts is wind. So obviously in the 400 gigawatts, 100 gigawatts is wind, which is 25% of renewable energy, not counting the hydro, which is different. And as far as reaching out 8 gigawatts, I've been saying this, it is not something an unachievable task. Even if you look at FY17, we did about 5.5 gigawatts in the country, which was the highest ever achieved in the wind. That was for 2 megawatt turbines. Now every turbine is 3 megawatts and more. So if you convert that, because turbine is turbine, whether it's 2 megawatt or 3 megawatts, direction remains the same. If you convert that, even that point of time, we had a capacity of 8 gigawatts implementation capacity in 2017. So therefore, I really don't see an issue in that. There are few challenges on the ground, which needs to get sorted out, and we will ramp up.
So 20% is possible as a percentage of the total mix and close to around 8 gigawatt of installations by FY27. Got that. That's with regard to the industry perspective. For your company, Mr. Chalsani, if that's the case, 8 gigawatt, and you have, I think, roughly around 40% of the market share. Motilal Oswal, and they know they are talking about you hitting close to around 3.2 gigawatt of installations in 2027. Possible, right?
Yeah, absolutely. We are at 2.7 gigawatts of installations in the country till end of February. So I think we should cross that number as a country, the wind installations. And when you're talking about the percentage, there are two different percentages. One is our share in terms of total installed capacity in India till now. So we are number one and far ahead of everybody else at 31% market share on the installed capacity. And if you talk about the currently, what is most important for us is the order book. And if you look at calendar year 24, some repeated news that just came up with the reports. Globally, not just here, we are number 5 in terms of order book. And they also said not number 5 compared to everyone else. Suzlon is the one which has 100% firm orders. Okay. So therefore, it's not just the orders. Globally, we're number 5. And then we also have firm orders.
Okay. All right. So just to confirm, 3.2 gigawatt of installations possible by 2027. For the industry, it could be in the vicinity of around 7 to 8 gigawatt, right?
No. 3.2 gigawatts of installed capacity would reach this year, this financial year, is expected to reach.
And for Suzlon in the next 2 years, given the industry will move from around this 3.5 to around 7 to 8, as per what projections suggest, by FY27, you could do around 3.2?
No comments. We don't give a guidance in advance. You know that very well. We always have this in CNBC. Obviously, that looking at our market share, being a market leader, more important is, for us, the business scenario got changed. Earlier, it used to be completely the COD. because we were doing 80% or 90% of order book used to be EPC orders. But today, the 20% is EPC, 80% is equipment supply and parts flow. So therefore, for us, our business is how many turbines we supply. Okay. Then because someone else is going to do the commissioning of those turbines. So the business slightly got changed, but we would, obviously the market is going to go to that level, we would grow, but I don't want to give a number to it.
So let's talk about that. I think the order book, as of what we know, the latest numbers, end of Q3, I think was around 5.9 gigawatts. So as we start looking forward to FY26, how is the tendering activity? There are some reports indicating that maybe there's some slowdown. Earlier, the overall update was about, I think, 10 gigawatts of tendering. That's what our colleagues are telling us. And the reality has been a little lower than that. So can you tell us what's the on-ground situation?
Yes. So the first thing is that what impact the tendering has on our order book is important to understand.
Sure.
For us, if you look at our order book, what you talked about, 5.9, the simple addition of 5.5 versus subsequently whatever we announced, 60% of our current order book is coming from C&A segment, which has nothing to do with the bidding and it has nothing to do with PPA. Okay, this is all for the large conglomerates for their internal consumption, whether it is JSPL or Charitavilla or it's Serentica. These are nothing to do with the bidding. And that's where we are number one. And then we are a preferred the OEM for these people. So therefore, that's one segment which there is no issue. Balance 40%, 20% of that segment is coming from public sector. Okay. You know that we won NTPC single largest contract of 1.165 gigawatts. And there are more in the pipeline for NTPC. And then even other PSUs have said that they will be coming out with more and more tenders. So therefore, that segment is second segment. Third segment, 20%, is what comes to us from the bid PPAs. And every single order we have taken in that segment has a firm PPA. Only after that is what we'll take the order.
No, fair enough, sir. So it's a mix. I completely understand that it's a mix. Your direct work you're doing for different corporates, some would be competitive bidding. But a general sense, now that we are going to be looking out for FY26, how do you see your order book growing across these segments?
Yeah, our order book, in my opinion, would remain the more or less similar sort of a category. 40-50% in C&A and PSU I expect is going to increase, and then the bid will remain at the same 20-25%. But now addressing your specific question of bidding, bidding is happening. So there were a few concerns raised in the recent past about the delays from the bidding to the signing of power purchase agreements. Okay. But if you see in the last 30-45 days, there is a significant progress which is happening. So there is a sense of urgency at various levels. And we are now seeing the traction in terms of signing PPAs. If you see in the last 30-45 days itself, number of PPAs have been signed. So therefore, bidding was never an issue. There's a huge amount of bidding happening, happened even today. Those are need to get converted into PPAs, which is what is moving now. That segment will increase significantly in FY26.
All right. Mr. Chalsani, good that you came on and spoke to us. Important last comments there. Things have picked up in terms of PPA signings, etc. last 35-40 days. We'll speak again, sir. Good luck. Thank you very much for joining us here on CNBC-TV18. We'll take a quick commercial break here. We're going to come back and we put the focus back on Trump tariffs. Sunil Kaul of Goldman Sachs will talk to us about what kind of reciprocal tariffs India and other emerging markets should expect. But the focus is very much on India in that conversation. Coming up. Okay, welcome back. April 2nd is essentially the deadline, tariff deadline for reciprocal tariffs. Now, President Trump has called it the U.S. Liberation Day, but most market participants know it as Reciprocal Tariffs Day. There have been a lot of uncertainty around tariffs. Markets remain on the tenterhook. Let's dive deeper on the tariff issue. I caught up with Sunil Kaul, Global Emerging Markets Equity Strategist at Goldman Sachs, and spoke with him about how to think about this issue, which is right upon us.
Our sense is that, look, India will be one of the many trading partners that will likely get sort of be included in the reciprocal tariffs. I think the Office of U.S. Trade and Representatives, they sought inputs from 19 of the trading partners. Out of those, 15 have trade surpluses with the U.S., which covers close to 90% of the U.S. imports, right? So India would be one of the 15 trading partners we think that could come in the reciprocal tariffs. I think if you just looked at the rate purely on the basis of product by product weighted average reciprocal tariffs, which is that if US matches sort of India's tariffs on each of the products, that effectively is about 11 percentage points of higher tariffs on India. But then I think we also have to keep in mind that the number could be a bit higher because of non-tariff measures like subsidies and import bans, and there are also kind of VAT. And so there is a lot of uncertainty whether the US does include VAT, does not include VAT. Europe is obviously a large risk there as well. So depending on what the number could be, it could be north of sort of pure 11 percentage points, which is based on the weighted average tariff rates. I think the one thing I wanted to mention in here is that our general sense is that these proposed tariff rates are intended to be sort of basis for negotiation, right? Like we have seen in Mexico and Canada's case. And so the likely number for each country is probably going to be somewhat higher than what the pure sort of product level matching of the tariffs would suggest. And then there will be room for that to get negotiated down.
So on a weighted average basis, tit for tat, reciprocal tariffs, 11% could be the number. Again, this is all in the possible. This is more than anything else a thought exercise. Yeah. But if you throw in VAT, etc., as well, the number could be actually meaningfully higher than 11%. It's possible.
It's possible, yes.
And the way, Sunil, as you also sort of explained, it is in a way an opening gambit for negotiations. Is that the way to think about it? I mean, say for example, if the number is 20%, market will be shocked. But will that then be? I mean, will they walk back based on how negotiations go?
I mean, that's exactly our expectation, Prashant, because there are a couple of things in here. One, I think if you looked at the amount of imports that these trading partners have, that's almost thrice what the imports from Mexico and Canada were. So the quantum we are talking about is quite large, which means that if you go by precedence, if they sort of delayed the tariffs on Mexico and Canada by 30 days, and then they sort of had partial reduction in those tariffs for another 30 days, that just suggests that there will be sort of room for negotiation and it won't be sort of implemented immediately in India's case, and for that matter, in most countries' cases. And as I said, these numbers are sort of open to negotiation, in which case the numbers will be higher, and then there will be that sort of 30 to 60 day window, as I just spoke, where there will be sort of obviously back channel talks, and there will be some room to take those numbers lower.
And it is also possible that instead of saying the number is 20% and then walk back from 20, I mean they say, well there's 10 now and 10 more coming. So that also in that sense perhaps could be a way to negotiate and show me proof that you're willing to work with us, and then maybe so we don't know, right, what combination and what measures and what route they use.
That's right. I mean, as I said, we are not entirely clear how it will be implemented, but just going by the prior instances with Canada and Mexico, most likely the number is going to be higher. Most likely it won't be implemented immediately on day one. They will give a window before this gets implemented. And then within that window, the numbers will be likely negotiated down with the final number, or in some cases, if there is potentially a deal, then it could be even sort of revoked entirely, as we saw with in some cases, right? So there is, as you said, there is a lot of uncertainty around how this pans out, but it does feel like the market will be somewhat negatively surprised, because the quantum of this is going to be larger than many of our investors are thinking, and it's probably going to be also pretty broad-based when it comes to different countries.
Market expectations, Sunil, are under 10% right now?
Yeah, I think on a weighted average basis, some of the recent surveys we did among clients is around sort of 9-10% on an average basis across these trading partners, not sort of singling out India in here. But that's, I think, what the expectation is, so about 10%.
Okay, all right. How are you leaning to the fact that VAT will be included? And maybe who knows, currency as well, right? I mean, the field currency is undervalued in many trading partners. Japan has been mentioned, China, and so what's your sense? Is that
look? I think that's why we said the numbers could be actually much higher, because as you entirely correctly pointed out, Prashant, there is the product level sort of tit for tat sort of tariff matching. On top of that, there is the non-tariff measures. On top of that, there could be sort of VAT. And then there is the currency undervaluation in some cases. And India obviously checks that box as well, as per sort of US administration. And then there is the additional news flow that they just mentioned in terms of countries that are importing oil from Venezuela. That could also be subject to additional tariffs. And obviously there are other countries, China, EU, which are kind of more impacted from that, but India at the margin is also there. And so there are some multiple layers on top of the pure reciprocal level product by product tariffs, which could come in. I think all of those things actually point to the same conclusion, which is that the initial number could be a little bit higher than what the market is anticipating, which is partly the reason that we also think that it makes sense to be a bit sort of more cautious on the markets in the near term because of this sort of impending risk.
Mm-hmm. But if it is, you and I are talking about it, and people around dealing rooms and in institutions are talking about this. You are talking to clients as well. So in a way, if this becomes the view that, start with a big number and then walk back, will markets react in a very negative way? Maybe we get a bit of a dip globally, and then that gets bought into?
Yeah, I mean, that's a great question, Prashant. I think the way this has been sort of getting asked in our conversations is that, is April 2nd the clearing event in that sense? Is that, okay, so they announce stuff and then the market sort of looks beyond it. So now it's already announced and that's a clearing event for the markets. Our sense is that it could still be an initial shock, as I said, because the numbers will be higher than what the market is currently anticipating. And then there is a room for negotiation. There's a window for each country, in which case I think there will still be sort of uncertainty in the market. So I think the way we sort of think about it is that you probably continue to have some uncertainty related to tariffs over the next sort of 30 days before things start to get 30 to 60 days before things start to get clearer in terms of what the final tariff rate would be for each of the countries. And so I think this will be something which will be an overhang for us for the next couple of months.
Here in India, there have been some news reports. Reuters reported that India is looking to cut tariffs on half of its imports, U.S. imports into the country. So it's fluid out there, right? I mean, so this is also obviously a little bit of posturing. I mean, showing the other side that we're willing to work even before and preempting some of this. So any thoughts there?
Yeah, I mean, exactly as you said. I mean, as we know, the U.S. Commerce Ministry was in Washington a couple of weeks back, and obviously there have been talks with India, similar to the other countries as well. So I think it's all a part of the deal or the negotiating tactics, as we just mentioned, Prashant. And so, I mean, it could very well be that, as you said, India would reduce tariffs on some of the imports well ahead of this. Or even sort of post the actual announcement, because the announcement, as I said, the implementation would be delayed, right? So India could still kind of implement these things post the April 2nd announcement. They could sort of also increase the purchases of sort of defense, energy related imports from US. And so I think each of the country will probably try to negotiate, probably try to lower tariffs in some categories where it's too high compared to what US is charging. And then also sort of increase some of the spending in areas of defense, energy, which US is keen on. And so all of this will be probably part of the countries showing US that they are willing to work with US and come to a more reasonable deal.
Is it possible to form a view on the markets with all of this uncertainty? Do you have one? The 1st of April, we'll also have these middle-class tax cuts which come into force. effect perhaps a few months later. 9th of April is the RBI, maybe a rate cut. What's the view on the market itself here?
Look, I think, Prashant, as you may recall, so we had sort of downgraded the market from overweight to market weight back in October, so about 6 months back, and the view there, and it was largely on the back of the cyclical growth slowdown, right? So fast forward, we have already seen markets have come off, valuations for the large caps have come off, but our general sense is that on the domestic side, your growth has kind of bottomed out, but it's still sort of going to be a gradual recovery in here. You still have policy, especially on the fiscal side, which is somewhat restrictive. We still have earnings cycle, which is still seeing more downgrades than upgrades. So we still think there is a couple of quarters of downgrades left. We still know that small and mid caps have much higher valuations, and the positioning there is still not cleaner, especially within the domestic funds, right? So there is still sort of more risks on the domestic side, even though I think the worst is behind us. But then on top of that is what we were discussing on the global side, which is that you have the impending reciprocal tariffs that could come and hit us, which will be with us for a while before things stabilize there. And so because of all of this, we still think it may be a little too early to take broad-based exposure in the market. So we are somewhat sort of cautious in the near term. I think we are kind of much more sort of alpha focused, looking at companies and sectors where you got sort of higher earnings visibility, more stronger balance sheets, and sort of more quality bias. I think that's how we're kind of leaning within our sector allocation.
Okay, all right. That's a conversation that Prashant had with Sunil Kaul, Goldman Sachs View, coming in over there. Well, let's now put the spotlight on Ashok Leyland. Ashok Leyland yesterday announced that they'll be closing their Switch Mobility UK plant. To talk about this and, of course, other concerns, the bigger concerns around the extent of promoter pledges that were announced yesterday. The promoter entity has created a pledge, I think, worth over 6,000 crores just yesterday. We have Mr. Shenu Agrawal, MD and CEO at Ashok Leyland, joining in. Mr. Agrawal, let's actually start with the news first, which came in yesterday. You announced the consultation process for closing or restructuring of this UK facility. Just tell us what led to this decision, what are the kind of losses this unit was making, and I think you've invested about 2,500 crores so far in this UK facility. So what happens to all that?
Okay, so firstly, thank you for having me. Listen, yesterday, like we announced, that Ashok Leyland had been committed to the UK market for about 15 years now. But in the recent past, what we observed was that the market variations were just too much. And also, we could not come up with a very competitive cost structure to be able to serve the market in the right manner. We had been making losses in the UK for many years now. And after having tried several things, we have taken a decision to start this consultation process, which might lead into cessation of the manufacturing and assembly activities in the UK. Of course, we are not exiting the market. There are two things that we are working on. Firstly, we do want to continue to support our customer base in UK by providing all aftermarket services. And the second thing is also we are trying to identify an alternate location for manufacturing of these products that are that would be destined for UK and for Europe. As far as the losses are concerned, in the recent past, we have been making about 2 to 3 million British pounds of losses every month. Now, the number varies depending on how much orders we have in hand and how much we can fill up our capacity. But that is the broad range between 2 to 3 million pounds per year. And of course, once this consultation process is over, and we have complete clarity as to which way it will go, we think that most of these losses should be behind us now.
Point taken. Mr. Agrawal, if you could talk about the timeline of Switch UK Mobility, the whole consultation process and the total cost you would likely incur.
Yeah, so see, what we are estimating right now, although the final number will come once the consultation process is over, is one-time closure cost would be somewhere around 5 to 10 million pounds.
All right, Mr. Agarwal, for Switch India, as I understand, you are all set to turn EBITDA positive in FY25. By when and how do we see the company turning PAT positive? And if there is any further cash inflow likely?
So yes, like I said, Switch India is expected to be EBITDA positive within FY25, and now FY26 is actually looking much more promising. We have a very large order book in our hand, which is 1,300 plus buses we have orders for. Also, on the overall volume for buses, we think we should be able to treble that in FY26. On LCV also, although last year was the first year of the launch, but we did cross the number of 1,000 units in FY25. So that number we are hoping should also double or more than double in FY26. So it is, Switch India is moving on a very good path. We are focused on bringing this company to PAT break even, so it stands on its own legs, and that we think should happen within next 4 to 6 quarters.
Okay. Mr. Agarwal, at some point in time, considering that you're talking about a lot of the growth expectations here, would you require to raise any money, to perhaps further invest in this business?
Yeah, that is our plan in the medium term. But right now, as you know, the evaluations for the EV businesses are not very good, right? And therefore, and we are not in a hurry to raise any external funds because, like I said, company is doing fairly well. Their cash requirements are minimal, right? We don't foresee any significant amount of equity infusion for Switch India also in the near future. So we are not in a hurry at all. Ashok Leyland balance sheet is very strong. After many years, we are a negative net debt company now, and we hope to improve that situation by end of this quarter and going forward. So yes, but within a 2-3 year time frame, we will decide whether we want to go through a private public placement to raise some funds, or we want to go for straight for IPO.
Absolutely. Mr. Agarwal, last evening, there's been a disclosure of promoter creating pledge of 30 crore shares. I'm asking there's concern in the market regarding the pledge and whether, impacts Ashok Leyland, whether this is for meeting IndusInd Bank's fund requirements. Have you had any communication with the promoter in this regard? What have you heard?
Listen, firstly, I think you are asking the wrong person, but what I would say is that the Hinduja Group has many businesses outside Ashok Leyland, right? And many of these are doing very well. Secondly, I would say that, we are really not privy of the matter as to what is the usage of these funds. But of course, if we get to know more, we'll be very happy to share with you. And finally, I would say that, during various interactions with the promoter, we have found that they are more than committed to the success and growth of Ashok Leyland. Many times we have been into discussions with them as to how Ashok Leyland can move forward in fulfilling its vision of being in the top 10 global CV players. So I can assure you that they are fully behind the company.
All right, Mr. Agarwal, we'll have to see how things pan out for now. But thanks a lot for joining in and speaking to us here on CNBC-TV18. Well, let's get back to the markets then. We've seen a good recovery from the lows. We had a bit of a dip in the first few minutes of trade, but that dip got bought into. And the Nifty Bank, we pointed this out earlier today, that given the global uncertainty, if we need to see a pullback, the Nifty Bank needs to perform. That's precisely what's happened. Mitesh Thakkar joins in back on the show. Hi, Mitesh. Buying the dip has worked today. Levels you're looking at on the Nifty Bank, and also a fresh couple of picks?
I think, as I said, the bias and the trend was on the upside. Now, I think, this low which is there on the Nifty was around 23,412, and I said 23,400, 380 might be a very difficult level for the Nifty to get below because the structure is positive and we've had a good retracement. So that level is held. That confirms that 23,400 in the near term should be an important reference point. And with this bounce back, I also further mentioned that, we might retest the 23,750, 800 zone. So I'll maintain that bias. With that, I have two banking names on the buy list, Bank of India and Bank of Baroda. I think both are looking very good. Bank of India is a buy with a stop at about 105 for targets of 112. And Bank of Baroda as well is a buy keep a stop around levels of 224.5 and 224 maybe, and look for a target of 236.
Absolutely. Mitesh, stay with us. We're going to come back to you for more questions in terms of specific stocks. The big loser, of course, on the Nifty is Tata Motors. I mean, Tata Motors is down almost 6%. The next biggest loser is Dr. Reddy, which is down barely 1.5%. So reacting to that auto news. Samvardhana Motherson is the other one, which is reacting at the broader space as well. Let's revisit these. Sudarshan is here with what he's learning and understanding. So over to you.
So most of the auto stocks are under pressure, but amongst all these stocks, two stocks that are seeing a big fall are Tata Motors and Samvardhana Motherson. It's on the back of announcement by US President Donald Trump, who has announced that there will be 25% tariff on all the cars that are not made in the US, and also has talked about auto parts. Tariff on auto parts, and these tariffs would be effective April 2. Now, why Tata Motors is in focus? Because US is one of the most important markets for JLR, and North America forms nearly one third of total sales of JLR. And the most important point for JLR is that it does not have any production facility in the US. So all the JLR cars which are sold in the US are imported from other countries like UK or other countries. Now, why Samvardhana Motherson is in focus? First, it generates nearly 20% of its revenue from the US. But for Samvardhana, the important point is it basically supplies auto parts to those companies which export cars to the US, and those cars might be impacted, and indirectly it would impact Samvardhana Motherson, which comes around in the range of 6 to 7%. That's the reason you are seeing a big fall in these two stocks.
All right, got that. Sudarshan, thanks very much. So that's the auto impact that's playing out. Let's focus also on NBCC. Remember, NBCC announced a very big order win along with the Maharashtra entity spread over several years. Vivek is here with the details. Vivek?
Well, that's right. It's a very interesting development that NBCC yesterday updated the exchanges. So what is it that they've done? Yesterday they said that they've signed a memorandum of understanding with Maharashtra, Mahatma Phule Renewable Energy and Infrastructure Technology Limited. Now, this is a collaboration between NBCC as well as Mahapreet, as it is known as. This particular collaboration is to jointly develop as well as undertake consultancy, fee-based, EPC as well as renewable energy projects. With this, NBCC now enters the redevelopment project arena as far as the state of Maharashtra is concerned. So what are the projects that they've targeted so far? It's the cluster development project in Thane. Data centers is something that this particular platform will look at, renewable energy initiatives, as well as slum rehabilitation projects in MMR, which is the Mumbai metropolitan region. Along with that, they will also be looking at residential products under the Pradhan Mantri Awas Yojana. So NBCC yesterday has informed the exchanges that the total scope of all of these projects is close to 25,000 crore, and these projects, once they do get the orders, is expected to be executed in the next 3 to 5 years. So what we need to watch out for is the exact scope of work, what are the projects that come into place, and what will be NBCC's share as far as the entire 25,000 crore pie is concerned. But nevertheless, the stock is up on the back of this particular announcement.
Vivek, thank you very much for that 3.5% high. Wipro is the next one. Rima has got more. Rima.
Well, it's a mega order win for Wipro, which has boosted the share price today. So the company is won from UK's insurance company called Phoenix Group, a £500 million order. That's about $650 spread over 10 years, which means approximately, simple math will tell you it's about $65 million of incremental revenue, and that's pretty sizable. According to analysts, that could add about 0.6% in terms of annual revenues. But remember, TCS also has an existing partnership with Phoenix Group, and what we understand that both Wipro and TCS will be servicing Phoenix Group. But it's a big mega deal for Wipro, and that's got the street excited. Back to you.
Okay. All right, Rima, thanks very much for that. A couple of IT names in focus there. We've got Vivek back in to talk about the impending Nifty regime, the inclusions, exclusions, and of course the fund flows that can be expected. Vivek?
Well, it's the last Thursday, and it's expiry. So on the back of that, also remember earlier in Feb, the NSE Index Committee had said that there would be changes as far as the constituents of Nifty 50 are concerned. They announced a whole raft of changes for the other indices as well, but we are focusing on the Nifty 50 changes because this means that today a whole host of passive funds will be forced to make these changes on account of their changes that will be effective tomorrow on the Nifty 50. So what comes into the Nifty is Zomato as well as Jio Financial come in. IFL Capital desk actually estimates that Zomato today could see inflows of close to $421 million. Jio Financial could see inflows of close to $221 million. On the other hand, what makes way, both the BPCL as well as Britannia will be out of the Nifty. So BPCL a little over $160 million of outflow and Britannia over $170 million of outflow. So expect these changes to take place in the session today.
Okay, all right, Vivek, got that. Thanks very much. By the way, look at the market screen. We started with such negative news, right, on the global front. But that's what we were saying, that the local news flow is very strong, both on FPI flows, on corporate action, corporate commentary. And look at the market now. The Nifty is sailing away, morning highs on the index, 108 higher. The Bank Nifty continues to lead from the front. But aside of the Bank Nifty as well, there are lots of other stocks, Hero Moto, L&T, Wipro, many names beyond the financials that are doing well. Reliance itself up about 1%, Trent. So it's a very green-looking screen this morning.
And the interesting thing is there is nothing extraordinary. If you just look at the Nifty top gainers, right? I mean, the gains are all 1%, 0.5%, 0.75%. So no 3, 4, 5%, no outsized moves anywhere, especially amongst heavyweights or, not heavyweights as well. It's just that broadly everything is up. You've got just about, 10, 12 names which are lower. And what is down is also down 0.5%, 0.25%, except Tata Motors, which is down sharply. So, it's the bulk of Nifty 50 names which are higher. Small gains, but most of it up. And I think that's essentially causing this nice lift which we have in our hands, about 120 points or so. Market breadth, I hope it also picks up, right? I mean, we've just flipped into the green. 1,300 stocks are higher and 1,250 stocks are lower on the NSE. So still close to 1:1. And we'll see how this one progresses as well. I think more on markets in a bit, but it's time for another quick commercial break here. Manisha is going to be with us for some commodity chat on the other side. Stay tuned.
Welcome back. Let's put the spotlight on the commodity markets now. We have Manisha joining in. Manisha, morning. So what's catching your attention today?
Well, I'm looking at the gold prices right now because we are trading very close to those all-time highs yet again that we hit in the month of March at $3,057 an ounce. So holding around that 3,020 to 3,040 in the last couple of sessions now. What is important is that you have seen gains in the gold prices come ahead of the U.S. reciprocal tariffs that take place on 2nd of April. And then the U.S. Fed speeches, many of them in this week, is something that will set course. Even as we have seen a bit of a gain from the U.S. dollar index, the gold prices have continued to be in the positive, but that clearly has been the situation for most of part of this year. Interestingly, you have various reports now suggesting that the gold prices can go much higher from where we stand right now. The latest has been from Citi. We spoke to them on the channel yesterday, and they say that their base case scenario for gold is $3,200 an ounce in the next couple of months. And if there are more tariffs and the global economic slowdown concerns go higher, then $3,500 an ounce on the higher side is what they're anticipating. Bank of America also came with a report yesterday. They are putting gold as an average price of $3,063 an ounce for this year, and they're anticipating gold at $3,350 an ounce in 2026. But Bank of America also says that the investment demand, if that goes up by 10%, then in next 2 years, you could be looking at the gold prices trading at around $3,500 an ounce. So higher highs coming in for gold prices from many of these banks and brokerages. And then, of course, you have ANZ talking about 3,100 in 3 months and talking about 3,200 for the next 6 months as well. De Beer Group has talked about $3,300 an ounce for gold. Goldman Sachs and BNP are putting forecast at $3,100 an ounce. And Macquarie has spoken about $3,500 as well in the next 12 to 18 months. So very bullish cues continuing in case of gold prices. And we have seen buying happen on every dips for this commodity.
All right. Thank you very much, Manisha, for that. We'll take a quick commercial break here. We're going to come back. It's our special Indianomics segment, Lata in conversation with Adesh Srivastava of Global Trade Research Initiative. They talk about what could the shape, size, extent of Trump tariffs on the 2nd of April look like.
Welcome back. While agriculture experts tell us that India's rice and wheat are too competitive to be hurt by even zero tariffs on US imports, the scene in industry is getting murkier. Trump has announced 25% tariffs on all foreign cars and auto parts. On the flip side, CNBC US has just reported that on April 2 itself, non-tariff barriers will not be counted while imposing reciprocal tariffs. That's the meaning of Donald Trump's lenient imposition on April 2nd. Now, will all this make the US less demanding on India as it negotiates the bilateral trade agreement? Or will this BTA get overpowered by these random tariff announcements that Donald Trump continues to make? For all these questions, I'm joined by Mr. Ajay Srivastava, head of the think tank Global Trade Research Initiative, and by far, as far as I know, one of the best experts on trade. Mr. Srivastava, thank you very much indeed for your time. I know this must be busy days for you. But first up, these non-tariff barriers are not going to be included. So do you think the BTA, the bilateral trade agreement that's being negotiated, is to that extent likely to be a little clement to us?
I don't want to guess on anything, but for example, so far he has spared India, and we are hit by only 2 tariffs, one on steel and aluminum. And now I just discovered by listening to you that 25% on autos and auto components. So unlike China and Canada or Mexico, he has not chosen to hit us so far. And we hope for the best for the April 2nd thing.
Okay, well, first, I want a nomenclature clarified. When we say BTA, bilateral trade agreement, is it the same as FTA or is it something less?
Great. Lata, so we have FTAs, PTAs, comprehensive economic partnership agreements, comprehensive economic cooperation agreements, bilateral investment treaties. So these are all same thing, economic policy agreement including. They all indicate to a free trade agreement. These are different nomenclature, but they basically entail giving preferences to the partner countries. Each other partner countries, they entail preferences, tariff preferences, other preferences. So this is an FTA only. BTA is a fancy word like SICA or SIPA they are.
Okay, that's important. Now let me come to what products in India you think will get impacted. Dr. Ramesh Chand tells us that our rice is very competitive, and wheat as well, because it gets MSP protection, is more or less protected. But on industry, auto parts, I don't know, I believe we don't export so much of auto parts. We export truck parts. Which sectors do you think are vulnerable?
So truck parts also cover their auto parts also. And our exports of auto parts are $2.8 billion to the US in the January to December 2024. So US global imports are about $90 billion. We supply just $2.8 billion, and US gets most from Mexico. Now imagine a scenario. He's hitting us with 25%. We're hitting everyone else also with 25%. That means everybody is at the equal disadvantage unless he gives exemption to Mexico or some other big country or a big supplier. So everybody is at equal disadvantage. So I don't think it will hit us hard. And then, auto tariffs, they are part of very tightly enmeshed global value chains. So some of the US car makers, they're assembling cars in US, but they are buying auto components from India. And I don't think it will take a hit. Second,
This is a big relief, sir, that, you're right. If all of us are going to be hit by the same thing, then, we may not necessarily have to suffer. You were going to say something else?
He also hit the passenger cars. So by 25% tariffs. So I say, please go ahead, 25%, hit us with 100%. It doesn't make any difference. Our exports to US, they are declining. They will be less than $10 million this year. So our industry will not even notice any tariff differences. We'll stop exporting to them $10 million. But the real danger is if government takes corrective steps, which means government under pressure from US cuts its own passenger car tariffs. That will be a real calamity. I want to share a small example in 20 seconds. You know, Australia had 25% tariffs on its passenger cars in late 80s. And more than 10 global manufacturers, they are making cars in Australia. Then Australia thought that 45% is too high a tariff. They cut it to 5% in the next 10 years. And every single auto manufacturer disappeared from Australia. Australia today relies on every single imported car in Australia is imported now. No manufacturers. Australia is trying to woo with subsidies that you please come and set up shop again in Australia. Nobody is coming. So we should rely from this, that auto sector is very important. It accounts for third of manufacturing GDP of India. So even though Mr. Trump hits us with high tariffs on passenger cars, we should not try to lower the tariffs beyond a point. Some, of course, from 100 to, we can cut by a certain percentage point, but we should never drastically lower it, you know, because there are no gains on this.
Okay. So, but you know, when I spoke to Mr. Bhargava, he said that even if the Tesla car came at zero duty, he says, I can compete. I don't have a problem. The problem will only be if they say that they are excused of countervailing duty, because the auto industry in India pays between 28 and, you know, even 40% GST. So long as that countervailing duty is imposed on the imported car, if it is from America, I don't have a problem. There are some people who worry that if the same thing is applied to BYD, we will have a problem. But if it is from American cars, we won't have a problem. You don't think so?
So Tesla, we are hearing it may be coming from Germany or Thailand. Okay. And we should also know what's the Chinese content in Tesla. It's not an American car. American brand is there like Apple. Apple is a brand. It's manufactured in China or now in India and many other countries. Similarly, Tesla. How much of the Chinese content in battery is there in Tesla? I think tremendous. We need to study that. Okay. And I think I and Mr. Bhargav, listening to you, are on the same page. He's also saying some higher level of tariff should be there. He's using the term CVD. I'm using the term some tariff without telling the details what type of tariff it is.
Fair enough. Fair enough. Okay. I read your note on the FTA itself. You are saying that even after the BTA or FTA is negotiated by India, we will still be at a disadvantage because they will have more interpretation powers?
Yes. So, Lata, the issue is that, you know, in most of the US FTAs and even decisions at the WTO, they have been taken under the fast track authority. So US Congress, it authorizes the US president to negotiate trade deals. When the deal is done, it is presented to the Congress. Congress can say yes or no, can't modify it. Today, that fast track authority, it expired in 2021, and US president or negotiating team has no authority to cut tariffs. So they are seeking other countries to cut tariffs only. So it's slightly murky area for me. So I say we should deal with the reciprocal tariffs and not give too much energy, not waste too much energy on this FTA or BTA, whatever we call it.
Oh, really? Okay, we were pinning our hopes on that. You're saying it's better to have to agree on reciprocal tariffs. But Mr. Srivastava, you said that Indian industry won't even notice. It will be only $10 billion of exports to the US.
$10 million.
10 million?
Passenger car exports to
Passenger
US.
Passenger car, I agree. But yes, overall, our exports is 45 billion. You know, for FY24, isn't it? I mean, overall Indian exports to the US.
So overall Indian merchandise exports to US last year were, I mean, in calendar year 2024 were $82 billion, considering Indian data, $92 billion considering US data.
Okay.
So it's high. But Lata, point to be noticed is this. About 90% of the industrial goods, all types of US supplying or not supplying, we already allow our FTA partners like Japan, South Korea, ASEAN, zero tariff access to India. Indian industry is well attuned to zero tariff imports on 90% of industrial goods. Everything almost except passenger cars and some more. So my theory is that we should offer those 90% industrial tariff lines to the US. We agree to make tariffs zero from day one, provided you also reciprocate and make your tariff zero from day one. So that will take care of 90% of US exports to India. So all this tariff problem will go except for the agriculture, which accounts for less than 5% of US exports to India.
Okay. No, agriculture, it's apparently only corn and soya bean where we could be very badly hurt, according to some experts. But, sir, I want to come back again to the industries that may be hurt. We were told that apparel and jewelry can be hurt. Is that right?
So, apparel, all the developed countries, including US or European Union, very cleverly, they already charge very high tariffs on the apparel. All the labor-intensive goods, apparel, shoes, handicraft, they charge high duties so that they can have some controlling levers on developing countries and LDCs. So they already have high tariffs, and the tariffs are comparable, so we won't be hit. And I was talking to one of my friends in apparel industry. He was saying we will be very happy to go for 0 on apparel.
Oh. Okay, that's good to hear if that's the case. We will try and invite textile experts as well, or apparel experts as well.
Yes.
Finally, Mr. Srivastava, what you're saying is that as we approach April 2nd, we should not worry much if there are reciprocal tariffs. And the BTA is not that big a deal for us.
Because BTA goes beyond tariffs. US is forced us to talk on intellectual property right, dilute your patent laws, allow access to government procurement. You dilute all your digital laws. For example, RBI mandate is there that financial data should be stored in the country. They will press us on all these issues, which we should avoid right now. Reciprocal tariff, as I say, 95% of US trade, that is industrial goods, we can absorb happily. And before April 2, now it's too late now, we should make an offer. Their team is in Delhi now. We should give a list to them. We are happy, we'll be happy to cut the tariff to 0 on industrial products. From day one, you also agreed to do that.
We will broadcast your views as far and wide as we can, and hope that will form part of the arguments or thinking that the Indian team is now underway, that the Indian team is negotiating. Thank you very much, Mr. Srivastava, for your time today. It makes us happy to hear that most of Indian industry won't even notice if the reciprocal tariffs are imposed. What we should beware is that when we negotiate the BTA, we don't allow unnecessary arm twisting by the US. That's the big message from Mr. Srivastava. Yes. Thank you very much for joining us. That's it on this edition of Indianomics. Thanks for watching.